morning, guys. Currently, you can see the time is around 10 p.m. And coming to today's Bank Nifty analysis as well as Nifty 50 analysis, you can see after yesterday's gap down, the market clearly rallied up, and you can see here, you can see the market gapped up around 400 points here. You can see clearly at around 470 points, guys. The market clearly gapped up, and market clearly targeted yesterday's sellers who might have sold here. As I have told you, the market would gap up tomorrow. If you go and see my yesterday's Bank Nifty analysis, you can clearly remember what I have told you, that I didn't expect a gap of around 400 points. I have expected it to be around 200, so it might target all those sellers who might have entered the market. But this gap up is too much that all those sellers who might have entered here might have faced losses. And you can see here, as soon as the market gaps up, you can see clearly the market is trying to trade above the 50 range, and this is the 5-minute range candle. This is the 5-minute zone, as well as the 550 candle, 550 of the first candle. This is the mid of the first candle. You can see clearly that the market tried to form some kind of trend line liquidity over here. I'm clearly expecting the market to go further bearish, but you can see clearly after this bearish breakdown, the market again tried to head higher, and price kind of faced rejection from this level and tried to push it further. But here you can see after this bullish momentum and a close about this zone, you can see clearly that this bullish momentum is what made us to enter long position. As you can see in my Bank Nifty live trade analysis, in that I have clearly mentioned about my trade. And if you see the anchor up level, the price is trying to take support from here, and the price is not closing below this level even after this bearish impulsive candle momentum towards the downside. And you can see even if you try to place 550 level, the common point between this and the common point between this, you can see clearly the price closed below here, but price took support from here. And you can see the price couldn't cross this way up. Here is where I entered long position, guys. And for target, you could have targeted the common point between this, the common point between this, and the common point between this. You could have targeted all the way to 1.68 level, or the 2.618 level, or the 3.618 level, guys. You can see clearly the market went all the way to 3.618 level. As you can see clearly on my Bank Nifty analysis of my previous video, I have posted a live trade. So there you can see this is 3.68 level, and you can see clear, and here is 2.68 level, and here you can see clearly 1.68 level. And you can see after this consolidation, the market again broke structure towards the upside. And if you try to plot the retracement levels from here, common point between this and the common point between this, you can see price taking support at 0.38 level. This is a 0.38 level, guys. And if you consider this swing structure all the way here, you can see clearly the price taking support here, the 0.58 level. As the market rallied up, the price took support from this 50 level here. This is the 550 and this is a 0.38 level. You can see both are in confluence with each other. And if you try to plot the anchor up level, you can see clearly the price took support over here. But actually you can take anchor up support over here. The last down move, you can see here, the last down move before it broke structure towards the upside. You can place anchor up level over here, clearly taking support over here, and as well as support as well as here as well. You can see clearly the market head higher. This is another confluence where you could have taken to see whether this zone is going to form some kind of support. You could have taken long position here. The first long position is here, guys, as I've mentioned you, to keep your stop loss just below this candle and target all the way to 2.68 level or the 3.68 level. You could have targeted all the way here. And another long position is this candle, or after this bullish momentum, you could have even taken, keeping your stop loss here So if you try to, you can target this swing high, or if you try to plot the Fib retracement levels, the common point between this, the common point between this, the common point between this, you can see clearly the market came all the way to 1.68 level. This is where you could have targeted your position all the way to 1.68 level. And or else you could have targeted the 100% level as well. For time being, let it be like this, 1.68 level. So see clearly. The 1.68 level. How to hold on to such kind of trade is what a lot of people might face some kind of difficulty. But what we need to keep to remember here is that after this bullish momentum, we can see some kind of liquidity and this impulsive candle breaking towards the upside, clearly indicating some kind of bullishness. This is one kind of liquidity where you could have easily taken. Or if you could consider the last down move before the up move, you can see clearly price taking support from 0.38 level here. There is another support level, and for target position, you could have targeted the swing points between this, and the common point between this. You can see clearly the 1.6 level is again acting another target, the same level which we have placed Fib retracement from here to here, the 1.68 level. Here also it's acting the same level itself. You can see clearly, and this level is very important where you could have exited your position, and you can see the market all the way rallied up to 1.68 level. And you can see even after this consolidation also, after this breakout structure of this high, if you can see the last down move towards the up move, you can see the price facing multiple rejections over here. This is the 50 level. And if you try to plot the Fib extinction levels, the common point between this, and the common point between this, you can see your 100% level has been targeted. This is the 100% level. And you can see the market came all the way to this demand zone itself. And again, the price rallied up to 1.68 level. You can see clearly the market came all the way to 1.68 level. This is the 1.68 level. And look at this, guys. Here the market was trading bullish, and you can see the last down move before the up move after this target. And you can see there was no proper retracement here. You can see this retracement clearly indicating the market to be bearish. But what happened is that this support here, this structure acted as support over here, and this order block has been mitigated. And you can see another bullish structure over here, clearly indicating some kind of bullishness over here. But again, after this three bearish candle, you found another bullish candle, clearly indicating the market to go further up. And you can see this last bullish candles before this consolidation, the price taking Fib support. And clearly you can see this 100% level as well as this 1.68 level. The market rallied all the way. You can see. And if you try to use moving averages for better confluence, you can see clearly the price here kind of broke structure towards one upside, but the market retraced back. So it's very difficult to trade, guys, but if you know how to keep your stop losses tight, you can easily trade. So you can see clearly you could have targeted here, keeping your stop loss just below here as well. And again, you could have taken long position here, keeping your stop loss just below here and targeting all the way to 1.68 level. You can see clearly, guys, because you can see this trendline liquidity also here. This is one trendline liquidity, and the market came all the way here. After this impulsive momentum, you could even have entered long position here, or after this bullish candle, breaking all structures towards the upside, you could even enter here, targeting up to 1.68 level. So this is one trendline liquidity where you could have taken long position. This is one such trade where you could have traded. And you can see after this momentum, you can see clearly the market broke structure towards the downside, came all the way to this demand zone. You can see the last down candle before the up candle. You can see this is the last down candle, and the market came all the way, took support from this level. There are high chances the market will continue further bullish momentum from tomorrow. We can expect new highs from here, breaking this level as well. So the market is clearly bullish, guys. And as I've told you yesterday also, this support zone over here is very strong. And you can see this support zone, which you might have seen in my previous video where I have told you the buyers over here are really strong buyers. Even after this impulsive break of this candle, the buyers over here acted as a strong support zone. And even though market gapped down like 400 points and rallied upwards, again further sell-off to continue, we could expect further new lows to form. But what happened actually is that these buyers are very strong and the price formed some kind of support here and rallied upwards, breaking the structure high, clearly indicating strong bullish momentum and targeting all those sellers. The market had to gap up, and you can see clearly this one trade is beautiful trade setup. Here you can see another beautiful trade setup here and here. And coming to this trade setup, guys, as today was BankX expiry. If you look at BankX spot chart and if you try to remove all the indicators, because both BankX and Bank Nifty will always move in the same direction, you can see clearly that if you come to this zone here and this zone here, you can see this zone acted as some kind of support zone here. So the market to rally all the way from 48 to 145. So there is some kind of demand over here. So we should always be vigilant about what market might react when the price comes here. You can see at around 115. If you consider it around 115 here, this is the 115 zone. Even the market wasn't much bearish, but premium movements over here seems to be very bullish, and the premium always 3x from all the way to 47 to 143. So you can see clearly this momentum from here to all the way to here. You can see clearly the bearishness and some kind of trendline liquidity, expecting the market to go further high. But you can see after break of this candle, you could have entered long position, as I have kept here this trendline liquidity, guys. But what we need to keep in mind is that here the premium has doubled. So you can see clearly the market, even after this bullish momentum, the market rallied downwards, took support from here. And now here is where the market, you need to study, guys. You can see clearly this candle, guys, at around 237 candle. This one candle is kind of bearish. And here you can see a bearishness of 87 points, input premium. And but here you can see a bullishness of 65 points from all the way from 40 to 100, guys, clearly indicating doubling of the premium, guys. The market went all the way to 40 to 100, clearly showing strong bullishness over here. And the market tried to take support, retraced back again. You can see this one candle made here confluence for bullishness, because as you can see the price rejected from this 100 moving average, the high chances the market would continue bearish and the premium decay would have been to zero. But you can see clearly this one candle changed the whole perspective, and you can see clearly after the market tried to retrace here, even after this bullish candle also, the price was trying to hold and not take this low. So you could have entered long position here, guys, keeping your stop loss just below this low candle and targeting the 100 moving average or the VWAP. This is the VWAP level. You can see clearly from all the way to 44 to 185, almost 4x your capital. This is one trade confluence. And here you can't make trade decision because as today was Sensex and Bank expiry, you can see this one 237 candle clearly double your premium on put side, and the market tried to retrace back but couldn't cross this high, and market teji se fall all the way from high to low. And if you try to plot the fib extinction levels, you can see clearly the market couldn't cross even the 0.38 level here. Or you can consider this swing actually, since this bullish momentum was not, you can consider this swing. You can see a price facing some kind of rejection from here. This is a 0.38 level and the 200 moving average resistance as well. And you could have entered short position again here, keeping your stop loss just above this zone and targeting all the way to this demand zone. Or if you try to plot the fib extinction levels, the common point between this and this, the common point, if you see exactly the common point, you could have targeted the 100% or this demand zone if you have marked. But look at this momentum, guys. This one momentum over here, keeping your stop loss tight. You can see the market took support from this VWAP level or the 9 as well as the 21 moving average, and from 105 the market rallied to 360, 358, guys. You can see clearly after this the market really went very bullish. And if you look at other strike prices over here, if you see clearly uh, to higher time frames, you can see clearly the price taking support from 9 as well as 21 moving average and rallied all the way higher. As I've told you earlier, this support is what we needed, guys. You can see clearly market breaking all this moving average towards the downside. You could have entered anywhere here as well. So this is one such confluence, guys, where you could have taken short position here also and targeting all the way here or anywhere between this zone. You could have targeted, keeping your stop loss tight, and you could have targeted this swing or anything of this sort, or you could have just tried here as well to 200 moving average. I hope you are getting what I'm saying, guys, because here you can see this bullish candle is there now, guys. You can see on a good premium movement over here, breaking this smooth moving average and expecting further bullishness. And this retracement also, you can see the price didn't cross this zone here. You can see the market went all the way here, faced resistance and tried to go down. And you can see after this bullish candle also, you could have entered long position targeting this high from all the way to 233 to 435, a 200-point move in a single go. This is what we need to get to learn from premium charts also, guys. Sometimes premium charts will help you with better signals than the spot chart. And you see, guys, here some sign of support, here the sign of some kind of support, and 1, 2, 3, 4, 5, 6, 6 beautiful trade setups, guys, today in Bank Nifty. And you can see how beautifully the market has been followed the price action. And coming to Nifty, guys, in Nifty, you can see there wasn't much gap up in Nifty, but you can see yesterday the market gapped down around 130 points, and today the market actually gapped up around 103 points. But what we need to know is that this zone is there now, guys. This is the pivot zone, and this pivot zone, sometimes when the market gaps up, there are high chances the market will take support from this pivot zone and try to rally upwards. And you can see the market kind of forming a rounding bottom pattern. This rounding bottom pattern is a clear sign of bullishness, guys. Whenever the market gaps up and forms some kind of rounding bottom, or if the market gaps down and forms some kind of rounding top also, it's a very sign that the market is bearish. But here you can see the market forming a clear rounding bottom shape, and you could have entered anywhere here, keeping your stop loss just below this zone and targeting this high as well. You could have always doubled your premium, or you could have just tried your stop loss. And if you see your moving average confluence, you can see the market trying to here trying to take support from this 200 moving average. As soon as the market tried to break this 200 moving average towards the downside, which further followed by another bullish momentum. Again, it broke structure towards the downside, again followed by another bullish momentum. And this kind of pattern, when you might have found, and this rejection of price, look at this, guys, when this price is rejecting from here and clearly breaking this structure here, this is the breakout structure. You could have considered this downward candle as some kind of demand candle, and you could have entered long position, keeping your stop loss here just below this candle and targeting all the way to this swing high also. Or if you plot the fib levels, the common point between this and the common point between this and the common point between this, you could have targeted the 2.68 level or the 4.26 level. You can see clearly the market went all the way here to this high, guys. You can see this clear high. The market came all the way here. This is the 4.23 level. But you can see after this bullish momentum also the market tried to pull back. So if you try to plot the common point between here and the common point and the high over here as well, you can see clearly the price took support from this zone, guys. This zone is the 0.38 level zone, as well as the first candles range, as well as the mid of the first candle, 5-minute candles range and the mid of the first candle. You can see clearly the market retraced all the way to this zone. And you can see after this bullish, you can see two impulsive bullish candles towards the upside, and again small bearish candles forming a kind of trend line liquidity over here. And after this bullish candle, you could have entered long position here, keeping your stop loss just below this candle as well. So if you try to enter long position, the last down candle, you can keep here. You could have entered, you could exit at 100% level. You can see clearly this is the 100% level, or the 1.68 level. You can see you could have targeted here as well. But it's fine, guys. Just to hold on to your trade to see whether your market sentiment is being bullish or bearish. And you can see clearly here also what happened is that the market here broke structure towards the upside. This is the break of structure. And what we need to see here is the last down candle before the up candle, which broke structure towards the upside. So if you consider the swing itself, so the count point between this and the count point between this, you can see clearly a price kind of forming some sort of support at this level. This is the 550 level. Even the market suddenly fall all the way to this level. You can see this 100 moving average acted as some kind of support, and some sort of bullish momentum was followed by. And if you try to plot the anchor gap level, guys, let's try to plot the anchor gap level to see if any kind of support. So this zone though formed here some sort of support. But what if you plot here, guys, you can see clearly this support zone, guys. And here also it formed some sort of support. And after this VWAP level has been broken, followed by another bullish candle and rejection of price here as well, and rejections of price here as well. So if you try to plot the anchor gap level here, you can see the market taking support over here, this level. So here also the market tried to form some sort of support, and the market clearly retraced all the way to here. In Nifty, the price action is not been well respected, guys, as of Bank Nifty. But the market was trying to be bullish only, guys. You can see clearly that after this bullish momentum, the market tried to take some support from here. This is a very good bullish sign, guys. Some kind of consolidation over here above these all moving averages, clearly indicating the market to be very bullish. You can see clearly the market here also trying to take support. You can see clearly, guys, when the market breaks the structure, it again retraced back. Again, it broke structure towards downside. Again, it retraced back. Again, it broke via towards the downside, followed by another retracement candle. Here it broke, followed by another retracement candle. You can see here also the market is trying to form some kind of support. And after this bullish momentum and retracing back to this zone, guys, towards the 921 and the VWAP as well as the zone. This zone is very important. You can see after this consolidation, there is huge bullish momentum. So you could have expected here also to trade towards the upside. I think you should have a lot of patience, guys, for you to take trades. And this momentum, as I have explained, same as Bank Nifty. You can see that around this candle at around 137, there was huge premium over. You can see even if you in Bank Nifty, you could have taken this position towards the downside, and this retracement price rejecting from 9 moving average, you could have entered here also. Looking at these premiums, guys, after this bullish momentum, price trying to take support from this zone, and price kind of facing some kind of sort of rejection from this pivot level or the 9 moving average, there is very low probability that the market would break all those levels and go higher. So there are high chances because the market has already broken all these levels. So you could have entered long position here also and targeting this swing highs, or midway you could have just scalped your position. You can see from 41 to all the way to 200. Anywhere between this also you could have taken long position, doubling your premium, guys. Nifty, Sensex expiry, there is huge volatility, guys, so it's very difficult. So keep your risk to reward ratio very minimum and try to hold on to your trades. Only then you'll be able to be profitable for a long run. I hope my knowledge here about Nifty and Bank Nifty has helped you. I hope some sort of knowledge, consistently making some sort of efforts regularly will help you to become a better trader, and surely you'll be a profitable trader one day, guys. Thank you.